Time for another stock review. It's a Christmas Eve special. We're doing all our members' reviews today. Grab, ticker symbol GRAB. This has been made during a live show, unedited. It happens as it happens. During this review, we're going to look at the website, learn more about the company. We're going to look at the latest ratings, analysis, latest news on the stock. We're going to do a back test to the S&P. We're also going to take a look at the general chart as well as more advanced. We're going to go into the intrinsic valuation, see who's buying, who's selling, their profit, the margins, the balance sheet. We're going to do a full assessment of this stock and decide whether it's a good stock to buy or not. Remember, full disclosure, I only own the S&P 500. I'm going all the way to $1 million from $5,000 live on my show in front of everyone. I never do options. I never short stocks. I only own the S&P. I don't pump and dump stocks. I interview CEOs. I even take part in earnings calls. I got friends on Wall Street. I've got friends of CEOs. I'm here to help people. That's what I do. This is my total balance, $135,000. I've got $250,000 invested. You can see my margin position, so I'm not pumping and dumping anything. I only own the S&P. I'm here, though, to provide a service to my members. 98% of our live viewers are members, higher than any other channel in the world. Go and check that out. There's loads of software that will verify that for you. Please tap the like button if you like this. If you are a member of my channel, for a minimum of $5, I can do a review. Yep, just $5. However, if you bid $5, you might be in the bottom of the list. If you bid higher, you'll go at the top of the list. That's how it works. But there you go. It's a member's perk, one of the benefits for being a member. And being a member is just a couple of bucks a month. In fact, it's never gone up in price. It never will, including inflation. So in fact, my membership gets cheaper every year, and I add more and more services. Right, so what is Grab Holdings? Let's take a look. GRAB. There is the chart. Doesn't look too happy, does it? Since it IPO'd, which was back here in 2020. So it got 4 years of history. It did exactly what all IPOs did during that period. They popped. Everyone was buying everything then with COVID stimulus checks. It popped up and sold off. Now, Grab, I'm just assuming, I haven't looked at it yet. I'm looking at it for the very first time, live, unedited. But I do know it's a food company. We'll come on to it in a minute, what it is. I'm learning as I go. Doesn't surprise me that this would have popped during COVID, because that sort of thing would have done, and then it sold off. So it's potentially, I don't know yet. We'll look at the chart. We'll find out. Is it a COVID play? And if it is, that's a bad sign already. But anyway, we'll look at it. You can see the chart not looking too good. However, you can see very clearly it is without doubt a trading stock. But I'm looking at it initially. Let's go down and see more about it. Okay, about Grab. Grab Holdings enables millions of people each day to access its driver and merchant partners to order food or grocery, send packages, hail a ride or taxi, pay for online purchases or access services such as lending, insurance, wealth management, and telemedicine. Although all through a single everyday single app, the company operates in food deliveries, mobility, and TPV in the e-wallet segment of financial services in Southeast Asia. Grab operates across deliveries, mobility, and digital financial services sector in 8 countries, namely Cambodia, Indonesia, Malaysia, Myanmar, the Philippines, Singapore, Thailand, Thailand and Vietnam. The company was founded by Anthony Tan Ping Yao and Tan Loy Ling in 2012, and it's headquartered in Singapore. The listed name is Grab Holdings. Okay. Getting a flavor of it. So Ping Yu Tan is the CEO. If you'd like Ping Yu Tao on the show, you can get him on the show. I never go to CEOs and say, oi, would you want to be on the show? Never send emails, don't believe in it. Cold calling is not what I do. However, if you are an investor of this company, you might like to email investor relations and say that we'd love to have you on the show. Martyn Lucas does meet the CEO. He even takes part in earnings calls, and he can promote your stock. Not for himself, he doesn't pump and dump the stock, but you could be on the show. And I very often rank number 1 for most stocks that we cover on YouTube and Google sometimes. And more people will learn about the stock. So if it's good, Why not? But I'm not here to pump and dump the stock. I'm not also here to promote it either. But I am here to bring the news of great businesses to the world. All right, so let's have a look. The volume, 688, extremely low volume today so far. The average volume is 32 million. Okay, reasonable volume. Market cap, 19 billion. Price to earnings ratio, negative 200. Wow, that's the lowest I think I've ever seen. 52-week low, 290, 52-week high, 572. All right, analysts, 79% are saying it's a strong buy, not really selling it, holding it. So this is a buy or hold from Morningstar. Morningstar, however, are paid to say it. I am not, so I'll make my own decision. The bulls say the mobility business has no major competitors, which could facilitate continued robust GMV growth. The bears are saying possibility of bigger conglomerate with massive war chest as market entrant if capital allocation is not an issue. The moment I was reading this, I was thinking Amazon. I was thinking Amazon can come along and swallow this up and do this better. And that's always a concern. So I am, the fact they mentioned that was something I even thought myself just by looking at what the business was. Remember, when I'm looking to buy a business, I'm not only looking to buy a business that's undervalued, that has a good balance sheet, a good CEO, a good management. Sensei will give me the chart for it, but also proprietary, unique, has a wide moat, can't be replaced, can't be taken over by somebody else doing the same thing. So that's important to me as well. So, I am looking for that. Does this company have that? I don't know. Robinhood investors like it. Don't care what Robinhood investors do. They don't move the market. Not interested. I'm a Robinhood investor. I don't move the market. Neither do you. They like it. They like it probably because it's cheap. That's how Robinhood investors very often are. Not everyone, of course. We've got some big investors, multi-millions, billion in Robinhood. But we also have a lot of small retail investors like myself. So I'm not too bothered what they're doing. Doesn't really move the market. Hedge funders, however, do. Hedge funders, they like this stock. They're buying it a lot more than selling it in decent quantities as well. So that's very interesting. That's a positive. Insiders have been selling, however. And that's not that much of an issue, though, because if I look at if I open that up and see what they've been selling, informative sell, shares sold on the open. Oh, okay. This is informative selling. Okay, that is interesting. What that means is they're not doing tax selling to automated trimming. They're actually selling on the open market. They're getting rid of their shares of a reasonable amount and increasing. So that's not a good sign. That's not a good sign. Started off by saying hedge funds are buying it, and then those that work there are selling it. Not too thrilled to see that. All right, economic moat, none. Well, economic moat is to do with the margin, and we'll talk about the margin in a minute, the profits, how they can be replaced by Amazon and stuff like that. So anyway, fair value, $5.10. The stock at the moment is at, let me go back to the stock over here and have a look. It's 488, so we're approaching the fair value. According to Morningstar, but I will look at that myself. Uncertainty very high. Now we've got an earnings chart I don't like. Beat the earnings in Q4 of 23, missed by the similar amount in 24 Q1. Then it seemed to have met expectations in Q2, then massively beat in Q3, and as yet we haven't got Q4. It's expected in February the 20th. Well, if one of my members does a minimum $5 super chat, we can cover the earnings for you, and we can look into that as well. If this does well, this video does well, why not cover the earnings for it? But I don't like the way that's bouncing around. As you can see, though, it's losing money at the moment. It is losing money. It's not a profitable company. It's still losing money. For a moment, it made a little bit, and then it's gone back down again, or expected to go down. All right, we shall see where it goes next. Is it trending up? Well, it's kind of up and down, isn't it? So it's a bit unreliable at the moment. Let's see who else buys the stock. This gives us an indication of how Robinhood investors see it, what they think about it, and how it's likely to trade, and how it's likely to be shorted, and all the rest of it. So, SoFi, rubbish. I like the company, but the CEO talks nonsense, so I can't touch SoFi. It doesn't make any sense at all. Shopify, interesting. I don't know enough about it, nor these. These are all new to me. I've not reviewed any of these, so I can't comment. PayPal, interesting. Rocket Lab, Palantir. Okay, what I'm seeing here, a lot of stocks I don't know much about. But what I am seeing by looking at that is no mega caps, nothing with stability, no blue chips, a lot of rock and roll sexy stocks, which tells me the stock is extremely volatile, and the people that own it are going to be pumping it and dumping it, and even those that work there are going to sell it. So not looking great so far. It's a penny stock. I don't like penny stocks. I like quality. So far, it's not a buy from me, but this is very early doors on the stock. We're just looking at the initial, what is it? Okay, now we're going to go and look into the balance sheet and the numbers and so on and so forth. So the first thing we're going to do is we're going to see how it compares against the S&P, the benchmark, because you could, just buy the S&P, right? So we've got to compare it. Otherwise, why are we buying it? We can go back to January 2021. This is as far back as we can go, and if we put $10,000 in Grab, you would now have 3,800. That's the green line. Not looking very good, right? It's flatlined. However, if you put it in the S&P, you've got 17,000. You've nearly doubled your money. Okay, and also you've got dividends. That's reinvesting with S&P. That includes that in that figure, by the way. Grab holdings, no dividends there. But if we look at it, it's just going down and then sideways. There's not enough volume to excite me for scalp trading. Talk to Ed Nevis on Discord. He might find a way to make money on this in the minute by minute trades. That's certainly possible, but that's not an investment. Looking at that. For 3 years now, I mean, it's awful. Nothing to say about that. Okay, let's look at the ratings. Seeking Alpha Analysts, they say it's a strong buy. Don't care what they say. Why? I'm a Seeking Alpha analyst. Seeking Alpha analysts are people with media they want to promote. It's why I don't do it. They've offered to pay me to do reviews on stocks. I don't do it. I haven't got time to do it. I'm not going to do reviews I'm paid to do. Otherwise, what's the point? I could be promoting my own stock and saying something's great. I don't like that. I'm not interested in what Seeking Alpha analysts have to say. However, I am interested in what Wall Street has to say, and Quant, which is the AI software, which is emotionless, just does the right thing. Quant says strong buy, Wall Street say a buy. So far, other than the initial share price and the fact it's a penny stock and it's volatile, we're starting to see signs of a potential buy here. Potential. Let's not get carried away. All right. Let's look at our factor grades. The valuation has improved. No, it hasn't. I beg your pardon. B- to C+, back to C. So it's dropped slightly. But from its last review. But 3 months ago, and it's down from 6 months ago, which is B-. So the valuation is getting more and more expensive, even though the price is down. Okay, because the price might go down, you might think it's cheap, but actually against its earnings, it's more expensive because it's earning less. All right, so the valuation is worsening, not improving. Growth A+, A+ for growth. Profitability. A, and we'll come on to that in a minute because that's interesting. They say A, but yet no moat from Morningstar. So if they've got a great profit, they should have a good moat. We'll have a look at it in a minute. Profitability A, momentum A, revisions B. Looks pretty good then, doesn't it? Looks pretty good here, apart from the valuation, a little bit expensive at the moment. But it's looking good there. What about the short interest? Stocks like this get a lot of short interest. Now, this is interesting, particularly as it's all over Robinhood. Robinhood seems to like it. Robinhood investors, that is. It's only got a 2% short interest. We get a lot of shorts come through Robinhood. They like to get, aggressive towards stock. I never short a stock. I never do options. Not interested in it. But it's got a 2.21 short interest, which is very low. So no short squeeze, folks. Not enough volume, not enough short interest. So no short squeeze coming, and not really that much downward pressure. Just a bit, but nothing really to worry about. So there we go. That's what we say there. Latest news on the stock. Now, if you like my Seeking Alpha spread, there it is in the chat. You can get free trials, discounts, which you cannot get without my referral. If you look below in the description and pin to the comments when this video comes out, you'll also find it there as well. So you might like to take a look at that. That's how I can access this information. Now, this is the latest news we have. It's about a month ago. Really, there hasn't been anything really to talk about for a while, but it's worth mentioning. Grab beats top line and bottom line estimates, raises 24 outlook. So if we go back to the earnings, this is a report on it. If we go back to the earnings, as you can see, they did beat on earnings. I just shared that to you on the last one, but they've done this before and then they faded away the next month. So we need to really see where the company goes next year. And maybe we'll cover it if one of my members requests it. February 20th, we can cover it. But if we perform well again, that'll be the first of recent times when the stock has beaten earnings consistently, and then we start to have a business. I'd rather pay $50 for the stock, knowing it's going to 100, than $4.89 for it and not know where it's going to go. So I'm looking for a business that guarantees me a profit, not hopiary. That's not what I'm looking for. And as we talk at this, the Santa rally is in full swing as predicted. I did say that. My portfolio is hitting all-time highs. It's smashing my all-time high. Look at that. And I haven't even got my dividend payout yet. Straight to $150,000. As predicted, the S&P is in full swing for a Santa rally. The Santa rally has kicked off. I've made $1,400 now in 2 days. I haven't even got my dividend yet. This is absolutely fantastic. The S&P is going up so much, considering that dividends are about to be paid out in just 2 days. So this is very, very bullish for the end of the year rally. Exactly as predicted. We're right again. I love it. Tap the like button and click subscribe and ring the bell. All right, let's look at this latest news. So Grab beats top line and bottom line estimates. Gap EPS of 1 cent beats by 1 cent. Revenue of 716 million beats by 16 million. On demand, you're not seeing that, I beg your pardon. On demand GMV grew 15% year over year, or 18% on a constant currency basis, to 4.7 billion. Adjusted EBITDA improved by 62 million year over year to an all-time high of 90 million. Operating cash flow of 338 million in the third quarter, and adjusted free cash flow of 76 million on a trailing 12 months basis. So cash liquidity totaled 6.1 billion at the end of the third quarter, compared to 5.6 billion at the end of the prior quarter. Okay. So far, it's looking okay, but I want more confirmation of the next earnings. The next earnings is good. I can buy this, potentially. I haven't looked at the balance sheet yet, have I? Let's look at the website. Let's learn more about the business. Let's see what this does. From essential services to earning opportunities. We're an all-in-one platform. Food, Mart, Express, rides, pay, insurance. Okay. We can get a feel for what this company is about. 13th of December. They've got a news item here. Let's see what they said here. Group M and Grab ads unlock the power of geo-based audience data in an industry-first partnership. The partnership will leverage Grab ads retail media ecosystem, including providing Group M and its clients access to geo-based audience insights across Southeast Asia. Grab ads. Okay, that's some good news. If you want further information, of course, you can go to their website, grab.com. That's the latest move there on this company. Now let's look at the actual analysis of the actual numbers. So let's have a look. Let's see how we can value it. So if we go over here, if you tap the like button, that would be very much appreciated, and consider subscribing if you like this content. Investor Don is here. Nice to see you here. I'm glad you joined us. We're making a video. I will come back to you in a moment. You wanted to be upgraded on Discord, and call in and I'll explain everything to you on the show as promised. You sent me a message and I said I would do that. So if we look at the valuation here, it says on paper it's worth it's overvalued by 43%. We value it at $2.80. Best case scenario, it's overvalued by 31%. Okay. Worst case scenario, overvalued by 64%. So we don't agree with the valuation has presented here. They're saying it's worth like $5. We're saying it's worth half of that. But anyway, let's scroll down. Revenue. Now then, as you can see, revenue has been increasing. It's up 4%, expecting things to move up higher. As you can see, no real S-curve though. So at the moment, it looks interesting. I'm going to say interesting is what it looks. Some analysts are saying it's it's interesting, saying it's a buy, but the ratings aren't. Valuation isn't amazing. Remember, I showed you it was a C, not an A. Doesn't match the growth really. So I'm not jumping on this thinking yes. I want to wait for what the next earnings is before I buy this, because it's a bit expensive right now. And we don't lose money on this show. We always make money, right? So 2.7 billion, up 4%, moving in the right direction. Okay. Operating income up 32%. Very nice. Net income up 55%. Very nice. But no massive projected growth yet. Nothing, no S-curve. Nothing to say this is going to explode to me. Financing cash flow down 17%. Investing cash flow, we don't have a number there. Operating cash flow up 3%. Let's scroll down here and see what we have here. Balance sheet, 9.2 billion in assets, 2.8 billion in liabilities. That is the perfect ratio. We like that. How much debt does it have? Long-term debt, 228 million. Very nice balance sheet. Now I'm getting interested. Remember, I was on the fence going, it's okay, but I want to wait. It's a bit expensive. Now I'm looking at the balance sheet. I'm going, okay, very nice. That is long-term debt is only 8%. Very, very good. Interest rates coming down, that'll help that, but not massive because obviously it's a small amount of debt. But a very, very nice balance sheet. Very nice balance sheet. Looking good. Good ratios. Yeah, good. No short-term debt, just long-term debt, but not much. Good. Going good so far. I'm now interested. Not saying it's a buy, but I'm now interested. Gross margin, 42%. Very nice. Moving up. However, net margin is what's important. Operating margin, negative. It loses money. This is what we're talking about. No moat. So when they were saying earlier, that there's profitability in this. Remember when I showed you this and it said A, profitability, really, really great profitability. Well, not really. We're still losing money and we've got no margin, which exactly goes back to the bear's point of view, saying Amazon can swoop in and crush this. Now we're back to a, not so sure, okay? Net margin, don't like that. Negative. FCF margin, 18%. Now, if you want full definition of what these things are, if you get my software, links are below. This is Alpha Spread. All my members can get a free plan of this and a lifetime discount, which makes my membership for free. Absolutely fantastic, really. So the margin doesn't look good at all. ROCE, negative. ROIC, negative. ROA, negative. ROE, negative. Okay. Let's have a look at it. So, profitability, Not good, is it? Profitability lets it down. The debt position was okay. 38%. It's not the worst we've seen, but it's not great. I'm not going, can't wait to buy this. It's got no moat. Profit isn't great. No. I wouldn't buy it yet. I don't know enough. The next earnings has to be good, and we have to see that growth, not just the promise of the growth. All right, as I mentioned on the earnings call. As I said, the balance sheet would be good. 53%. It's not amazing, but it's good. It's just about to turn green. At this stage, 53, just about to turn green. The balance sheet is okay. What does that mean? It's not going to go bust, not going to go bankrupt for a while anyway. Worst case scenario, 13% downside. Well, it is a growth stock. If you were buying this, what you would be doing is you'd be allocating X amount. Let's call it $1,000 today. You wouldn't go all in today. If you're very bullish, you'd put 80% in. If you're waiting for the next earnings, which is what I would do, you'd put $500 in, 50% in. On the next earnings call, you now know more. If it drops, you can buy more and lower the average. If it goes the same or up a bit, but you now know it's doing better and it's a good business, you can add the other 500 so your full allocation is in. Right, so that way, if it does go down, you can protect yourself. If it goes sideways, you can buy more once we know more. Okay, because the upside is 15%, outperform the S&P if that's correct. However, the S&P at the moment is on an EV revolution, so it's outperforming itself at the moment. So bear that in mind. 71% if all goes well and everything's fantastic. Well, there you go. There's a reason to buy it if that happens. Okay, so there is my review on this stock. What have we got here? 1 month ago. Let's see what these people are saying. No, I'm not going to bring this to you. This is CNBC. These are contributors, but very often they are investors themselves, and they say all sorts of stuff, which I approve to be absolutely useless. It's good entertainment for CNBC, but it's very often useless because what they're saying is about their own positions, and 9 times out of 10, it's rubbish. So we're not even going to share that today. So let me come back then and give my final thoughts on this stock. It's an interesting stock. I am more pro American businesses. I've got to be honest though. Track proven records. Remember, I've got $250,000 invested. I don't lose my money. I'm always making money. So I'm not taking unnecessary risk because I'm getting close now to my target of $1 million on the show. So I don't mess around with my money. It's interesting. Its margins aren't there. Its balance sheet's okay. It's a sort of company that can be replaced and bought out and stamped on and squashed by things like Amazon. It's always vulnerable because it's got no moat. It can't reduce prices. It's just got nowhere to go. It's interesting. I would say it's a potential buy if I was interested in this sector and I wanted to buy an individual stock, which I don't, of course, for integrity of the show. So I'm not pumping and dumping it. I would consider going 50% in. Wait for the next earnings call. If the earnings call presents volatility, which it will, always has done, it will allow me to get it even cheaper and lower the average, and then it's maybe more of a buy. If it goes sideways or even up a bit, but now I know that the company has performed well again, which it hasn't yet done for 2 quarters in a row, at least in the recent years that we're showing you here. Now I know the business is stronger. Now I can buy more. That's what I'd be looking to do for this stock. There is Grab. I hope you liked it. Click above my head for all the links down below in the description for all the free shares of Robinhood and so on, plus all the alpha spread and seeking alpha. Over here, I shall create a playlist for Grab. So if we ever do Grab again or the earnings, it will be in here. If someone does a minimum of $5 super chat, I will cover the earnings in February. We can see how it goes live on the show, and we can put that in there as well. Down here, I should put my full alpha spread playlist, all the reviews, all the stocks I've reviewed. I've reviewed, I think, nearly 300 companies now. So there you go. Until next time, as always, take care of yourselves and each other.